what I always enjoy, one of my favorite parts of stock trading is the psychology part. The part of understanding how other people are thinking, where other people are going to want to buy, where other people are going to want to sell, because that is how you guys are going to be successful in the market. Now, I do want to go into an article today with that we're going to be talking about behavior in finances, behavior in money. Why traders turn towards certain plays because of what reasoning? Because they think it's going to be doing good or they think it's going to be doing bad. As I always say, people move stocks. It isn't some outside force that we can't touch. People move stocks, and people buy stocks and move them up, or they sell stocks and it moves it down. We understand people, we can understand the market. But how do we understand people? It's a lot easier said than done. How do we understand people? You guys have to understand how they think, what they are going to think, what they think looks like a good play, what they think looks like a bad play, to the overall group, that mob of people that are going to be buying and selling. To them, does this stock look good, or to them, does this stock look bad? So I find it really fascinating how stock trading is really just about understanding other traders. Yes, we have fundamentals. Yes, we can do our TA or technical analysis, and we could figure out what the stock is going to do, because a lot of other traders are going to do this as well, and that's going to push up the stock in some manner. But again, when we get these hot press releases, when we have certain indicators that show up that say, okay, we're now bullish. Bullish and 50-day moving averages and, different chart patterns, it's all just leading more towards a psychological standpoint to say to us, hey, this is bullish. It's just having these indicators and having, these different fundamental values, they're all made up by people to make the stock, look more bullish, or to make the stock, more bearish. If all of us, there could be a great press release that comes out, a great press release that says positive phase 3 trials, we just cured cancer. If everyone still decides to sell for some reason, that stock is still going down. So, us following indicators, it's just, we learn these indicators because we know the whole group, the whole majority, the whole mob, they're going to follow these indicators as well. And that's all going to put us on the same page, which means we're going to be moving up or down. But again, people move stocks. So if we can understand the behavior and how the mind of the average trader works, and how that mind is going to be buying and selling depending on what, looks on a visual aspect very appealing, we'll be able to figure out the market. Because sometimes, again, stocks spike for no reason. Sometimes stocks spike because momentum's there. And that's very visually appealing. You see a stock go from $1 to $2, you want to get in. You say to yourself, hey, I could have made $1,000, $2,000, $3,000. It's very visually appealing to hop into a stock that's ripping. And then you forget your other values. You forget why it's even ripping. If there is a reason, is there any sort of credibility? Is the stock, considered bullish? Is the stock considered bearish? If the stock is overbought, if the stock is oversold. But a lot of the times, we have to learn the behavior of finances because we want to see what looks visually appealing to other traders. What is going to make traders keep pushing up these stocks? Stock squeezes, or stocks that run on these huge momentum spikes, and they just keep going and they keep ripping, like ETRM. You get these big time rips that go from $2 all the way up to $30. The press release that came out on ETRM back in January, this was a very nice play, but honestly, it just kept going on up because it was visually appealing. Okay, we went from $2 all the way up to $4. Oh, wow, big gap up. I'm going to buy this at the start of the day. Okay, now it rips all day. Hey, this thing is a rocket. People are going, oh, this thing's going to the moon. Okay, now $10 all the way up to $18. It's visually appealing seeing this thing just up, up, up. So everyone's be like, hey, up, up, up. Let's go. Let's dump our money into it. And then you jump on even more. $23, all the way up to $30. Guys, us as people, we like things that look nice. You like cars that look nice. You like clothes that look nice. If you're a male, you like girls that look nice. If you're a female, you probably like guys that look nice. You're visually appealing to it. If you're a stock trader, I know it's a little weird, you like charts that look nice. You see a good looking chart, you see where money could be made, and you're like, oh yeah, that is a hottie. You get that same exact feeling because it's visually appealing to the eye. You get excited about it. Now, why do you get excited? Because inside we're saying, okay, this is a stock that could bring us money. Or if you're saying to a car or something like that, you say this is a stock, this is a car that is, very reliable, or it sets a certain financial aspect. If you're looking at, let's say, a woman, you're saying that woman is very pleasing to the eye. I think she's attractive, so I want to look at her more. Same thing with a car. And then we come over to, stocks. This stock is attractive, pleasing to my eye because I feel like I can make money out of it. It gives me a sense of happiness. It gives me a sense of excitement. Saying, hey, you know what? This stock is going to be going on up. If the stock is ripping, I get excited. I get happiness because I feel like I'm going to be making more money in the stock, or I'm going to be making money, or I'm already making money because of the pure fact it's very appealing, not only to look at, but actually when you're in it, you get that satisfaction feeling as well. And that's where a lot of behavior comes in. That's where a lot of behavior comes in. And you guys all know what I'm talking about. You guys get into a stock, you start winning, you start jumping up and down, shoulders start bouncing a little bit, start giggling. You're like, I love stock trading. And everyone's having a good time. And because you're just like up a few $100. And then all your friends are working and whatever they do, if they're doing construction or if they're teaching or whatever. And you're just like, yeah, I made $900 in about 5 minutes. And then your friend is like, wow, I made $100 over the last 2 days or whatever, or being a waitress or whatever. And you're just like, yeah, stock trading is awesome because you have that great sense of pleasure out of it. And that's what kind of the behavior aspect is. Now when we talk about penny stocks, guys, when we talk about these penny stocks and how quick they can move and how they run on momentum and how they could be manipulated, this is where out of the stock market, guys, this is where emotions run wild. Because we have Apple, we have Netflix, we have Microsoft that are based on purely statistics, the CEO, the earnings reports, the PE ratio, how that business is actually doing as a business. How's its sales doing? How is the customer growth coming along? Everything along those lines. Getting down to penny stocks, guys, this is like the most emotional roller coaster in the world. Personally, again, I love trading penny stocks. This is all I trade. I don't trade the Apple or any of that stuff, guys. Right here, Apple and Microsoft, those are like full-grown adult stocks. Penny stocks, this is like, if stocks were humans, this would be the puberty of stocks. This is where that 14-year-old boy or girl is just crying or getting excited or left and right, up and down. Everyone doesn't really know what the heck's going on through their mind because, again, they're so small, they get manipulated so easily, and this is where just emotions flood through the market, the penny stock world. Now, if you can harness it, if you can understand it, you can figure out, how to make so much money. I think that's the coolest thing because, yes, I could study different finances of, Apple and figure out, what is the customer growth going to come in. But again, is that exciting? Does that really get, excitement to me? No, I don't really want to read, how many assets you have or, a certain balance sheet or anything like that. That's not really too much fun for me. But if I can understand, hey, you know what? This stock just came out with, positive phase 3 data. Oh, the chart setup's nice. Okay, traders are seeing visually, appealing to the eye that we're spiking right now. People are going to be dumping money into this. Okay, everyone's dumping money into this. This thing is shooting on up. Okay, how much is this going to go? Oh, everyone, you check these stock tweets right now. People are getting really excited. All those people honestly have no idea what they're talking about, but the fact that they're excited means they're going to be dumping more money into this play. Dumping more money equals more shares, more volume, more activity, more profit. So again, it gets into some crazy, just emotional puberty roller coaster of just, people, getting so much excitement and so much happiness. And then you can also flip that around. You could flip that around. Well, if a stock starts dumping, people get, very scared and then they dump money. And then you can get people getting even more scared. And then people getting, oh my gosh, what is happening? And they dump all their shares. And that's where you short stocks. And again, shorting stocks is basically betting against the stock, hoping it goes down. So we could have the same exact thing, where we go up and we can make money on people just pushing stock up on that pure emotion and pure excitement. Or we can make money when the stock falls as people get scared and people, are worried and they get, one little shake where the stock drops can cause an avalanche of red where one person sells. And then that person's like, okay, well, I saw that person sell. I'm going to sell. I want to go early. Then one person sells. And now when one person sells, 10 people sell, then 20 people, then 100, then 150 leads to a collapse of the stock. And if we could predict that, if we could see that, if we can feel that, okay, you know what, emotions are taking over this trade. Yes, we have statistics. Yes, we have indicators. Yes, we have all our fundamentals. But when it comes down to penny stocks with these low floats, emotions really run high, guys. And it really determines where these stocks are going to be heading next. And that's what I think is so cool about a lot of these plays. So I talk about psychology a lot on this. And I always talk about behavior because I think it's a very neat aspect in trading. And, behavior doesn't really run high through those adult stocks, or those blue chip stocks when we're talking about Apple and stuff because they're so large. They're so large. They have such large floats. It doesn't really get phased. It doesn't get phased. If you go up to a 45-year-old and it's just like, hey, I don't like you. The guy's probably like, that's great, kiddo. Keep walking along. He doesn't care because, he doesn't, you don't take You don't you don't take no shit basically when you're that old. You don't really care. You say that to a 10-year-old, it's like, hey, I don't like you, Tubby. I'm not picking you on my dodgeball team. The kid cries, he runs away. If you're the pick first, then you're all happy and everything. So again, there's a big difference between playing, these adult stocks to playing, these little stocks, because these get so much more manipulated. And again, manipulated sounds like a bad word, but at the same time, if we can understand how they're getting manipulated in certain ways, then we can profit off them, guys. And that's what I want you guys to see. So it's all about behavior aspects. But those bigger stocks where we have millions or billion-dollar companies where there's large amount of shares and large floats, those are not going to get, emotionally off balance at all. Those are going to go nice on little climbs, because there's a huge difference between looking at a stock like ETRM, or that can go from $2 all the way up to $30, which is running like over 1,000% in a short amount of time. Or let's say, what was our most recent play? DCTH. DCTH ran 500% in the last 5 days. That's going to be a lot different than looking at Apple, where this stock just, mostly of the time, just, Apple's always a good company, so it just keeps going up, 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 and then, it's moving. Let's see what Apple's up right now in Yahoo Finance. So let's see. So Apple's, doing a little green day today. And let's check it out. So Apple, this stock is currently up 0.3%. 0.3%. Well, that's exciting. Not really. Let's look at Netflix. Let's see how high Netflix is up today. So when we look at Netflix is down 0.35%. I don't want to play a stock that in my investment I'm going to make 0.5% or 0.3%. ANY, I want to make 60% on my investment. I want to make 45% on my investment. 31% in my investment. I don't want to make 0.5%, and that's why I don't mess with those larger stocks. I want to make big money in a short amount of time. And now, can it get risky? Yes, it can. But not if you learn how to do it properly. Not if you know your chart patterns. Not if you're willing to study. Not if you're willing to put in the actual work to do well in the market. And that's what people don't understand. Yes, there's fundamentals. Yes, there's analysis. Yes, there's a psychology aspect on it. But on top of that, there's also just pure experience. The longer you do something, the better you're going to get. If I go outside every single day and shoot hoops, probably right at the start, I'm going to stink. Eventually, maybe 2 months, maybe 3 months, maybe 2 years in, I'm going to have good form. I'm going to be making a lot more shots. And again, it's always nice to have a mentor to show you the proper way. Now, if I go outside and shoot hoops and, I'm shooting them the same way incorrectly every single day, I'm probably going to find a awkward way to make the ball go in. But again, I don't have some sort of mentor to actually show me, okay, keep that arm tucked. You want to have a nice follow through, one-handed shooter. Follow these certain principles. If kind of the same exact thing for stock trading. If you don't have a mentor to someone show you the proper way to trade, you might make money on some awkward, weird strategy, but it may not be, so fundamentally sound. So, but the overall fact I'm trying to get to you guys is the more time you spend in the market, the better you're going to be. Experience. You're going to be able to read charts better. You're going to pick up things on the level 2. You're going to have better scanners. You're going to have, you're going to be able to read volume and read graphs a lot better. It really comes down to that. So I always want to make sure that you guys are putting in the necessary work into the market. Now, the article I wanted to kind of just go over, it was over on Investopedia. It's just, talking about finance and the behavior behind finance. So again, I love the psychology part of stock trading, and I love, if you understand the way people think, you can basically make money off it. So think about not yourself, think about what others are going to do. Yes, you have to say, Sean Dekmar, what am I going to do? I sit down, I say, what am I going to do? What am I going to trade? But I also say, what is everyone else going to trade? What is the mind of the trader across the street thinking? And what is he thinking compared to everyone else thinking? And what is that mind, maybe of the guy who bought the most shares? What is he thinking? I'm not thinking about myself when I'm trading. I'm thinking about everyone else, because I don't move the market. Me buying 3,000, 4,000, 5,000 shares isn't moving the stock. It's everyone else buying 4,000, 3,000, 4,000, 5,000, 2,000, 1,000, because that adds up. That adds up to 200,000, 300,000, 1 million shares. I'm just a puny little 3,000 share guy trying to make a profit in this stock market. I'm just one little 3,000, 4,000, 5,000 share guy trying to make some money on a 2 million, 10 million share stock, on volume on the day. What is my little 4,000 shares going to do? Absolutely nothing. So let me think about what everyone else is doing and understand where the majority of the mindset is. The majority of emotions. Are they up? Are they down? Is there excitement? Is there fear? Are people looking to break this out? Are people looking to sell it? Am I overbought? Am I oversold? Let's think what other people are looking at. So let's just read this over a little bit, and let's read over some behavioral of finance. So behavioral finance is a field of finance that proposes psychology-based theories to explain stock market anomalies, such as severe rises or falls in stock price. Within behavior finance, it assumed that information structure and the characteristics of market participants systematically influence individuals, investments, decisions, as well as market outcomes. Breaking down this, guys, the efficient market hypothesis proposes that at any given time in a liquid market, price reflects all available information. There have been many studies, however, that document long-term historical phenomena in securities markets that contradict the efficient market hypothesis and cannot be captured plausibly in models based in perfect investor rationality. Many traditional models are based on the belief that market participants always act in a rational or self-bettering or wealth-maximizing manner, severely limiting these models' ability to make accurate or detailed predictions. Behavioral finance attempts to fill this void by combining scientific insights and cognitive reasoning with conventional economic and financial theory. More specifically, behavioral finance studies different psychology of bias and human possesses. These biases or mental shortcuts, while having their place in purpose and nature, lead to irrational investment decisions. This understanding at collective level gives a clearer explanation of why bubbles and panics occur. Also, investors and portfolio managers have a vested interest in understanding behavioral finance, not only to capitalize on stock and bond market fluctuations, but also to be aware of their own decision-making process. So guys, what are we reading over here? Let's definitely sum this up. Talking about this, we have different, indicators, and there's different ways to say, okay, why is the stock going up? But sometimes, as they're saying, it just runs on, self-interest, or what is, sometimes the most irrational decisions. Sometimes you make irrational decisions on bad investments because of your emotions or which way stocks are heading. Sometimes you may be playing a stock longer because your emotions or which way your stocks are heading. Sometimes this leads to different bubbles or different panics, as this could say. If you guys don't know what a bubble is, basically this is, let's go over this. What is a bubble? An economic cycle characterized by rapid escalation of assets followed by a contraction. So it is a surge in asset prices. So basically, guys, when you have a bubble, it's just, blowing up. What do? You blow a bubble. You get a bubble, you go, whoo, blow some air in it. It gets bigger, 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 and bigger. And that's really just kind of the same exact thing when I'm showing you guys into these plays. Like when we look at, ETRM, and we get these giant rips. ETRM, that, it's a bubble. It's just, people are going, blowing more air into this, blowing more air into this thing until it pops. And it comes down. HTGM, people getting hype. And again, I'm applying what we read over into, the penny stock world. And that's what I want you guys to understand. HTGM, it's just running on the pure fact of its visually appealing. It's that the assets that we like to see, things that are going to give us excitement, that are going to, move us up on and make us feel better, hit that euphoria and a state of mind. So, breaking down this behavior of finance, we can have very rapid moves. Sometimes, so rapid they don't make any sense in theory. They don't make any sense in theory because they're so rapid. And again, some investors or technical analysis, gurus may be like, I don't understand why this is happening. It's because of the plain fact that people are the ones who move stocks. So if we can push these plays higher than, ever expected, that is on the pure fact of just traders being all within sync on the same emotions, basically, that say, wow, we're going to keep pushing this up, and it just keeps going on up. So again, reading over this understanding at collective level gives a clear explanation of why bubbles and panics occur. Panics Same exact thing. If a stock is up really high, or maybe sometimes we get a press release that comes out that says, hey, this company just went bankrupt, or anything along those lines where we cross a trend line and it goes bearish, again, we go bearish, the thing could absolutely drop. And one person dropping could lead to 10 people dropping. Now, 10 people drop could lead to 100. Now, 100 people dropping, all selling 1,000 shares, now we're going to have 1,000 people dropping, and the whole, stock could absolutely crash. So, I definitely want you guys to be taking this into consideration, the behavior behind finances. So bias is studied in behavior finance, a prominent psychological base in herd instinct, which leads people to follow popular trends without any deep thought of their own. So I like how the author went into this. We'll talk about this. Herding is notorious into the stock market and the cause behind dramatic rallies and sell-offs. Herd instincts correlated closely with empathy gap, which is an inability to make rational decisions under emotional strains such as anxiety, anger, or excitement. Again, probably some of the most common feelings within the market. So some of the most common feelings in the market. Let's talk about this first line, though. A psychological bias that the herd instinct, which leads people to follow popular trends without any deep thought of their own. So think about that for a second. Why did you get into the stock market? Why are you interested in the stock market right now? Because of the plain fact that you want to make money. So again, you don't know anything about the stock market maybe when you first start off, but why do you get into it? Because you have that sense of excitement that you want to make money. Now you're going to start trading. I know a lot of people, again, because we work with Dekmar Trades, and we have 600, 700 team members and traders every single day. What do we have? Some of these people don't study at all. And what do? They buy stocks that just everyone else is buying. And I'm not just saying, beginner traders in here in Dekmar Trades. I'm saying beginner traders everywhere. Everywhere. What's one of the biggest problems? One of the biggest problems for traders is the fact that they chase stocks. Chasing stocks is the act of buying stocks late. It's the act of when a stock already goes on a nice big spike, it's already up 100%, it's up 80, 70%, already went on a $2, $3 rip, and then you're buying the stock. And you're buying that stock because you believe it's going to keep on going. And you're buying the stock because it already went on a nice big rip. But let me tell you, when a stock is up 100%, most likely it has a better chance of falling now than it actually does going on up. We already ran 100%. The stock went from 0 to 100%. That is absolutely huge. But the plain fact is a lot of people don't understand that. They say, oh, we're up 100% to the moon, baby. This thing's going 1,000. Ow! And that's not always the fact. And you have to see that a lot of, why these bubbles do occur. And sometimes, again, they do keep on going. A lot of times, they crash after this time. But sometimes they do keep on going because of the behavior, because of traders' behavior saying, this is what, where's the stock's at? I think it's going to keep on going on up. I'm excited for this play. I'm going to keep dumping shares into it. I keep dumping shares in it. Someone else keeps dumping shares in it. Someone else keeps dumping shares in it. And, it just keeps on going. And sometimes, traders who lose at the end when stocks finally start doing turnaround, what they do is they buy that certain stock on popular trend because, again, it's only going up. But they don't have any deep thought of their own on why that stock's moving. What do we do here every single morning, guys? Every morning at DekmarTrades.com, we go over at 9 o'clock all the best plays we possibly can. We go over all the press releases. We filter out all the ones that are worth watching. Then we go over all the chart pattern setups that have breakouts. Then from there, we pick the best chart patterns, the best press releases, and we then compare which ones are going to be the best out of that, like 4 or 5. Then out of that 4 to 5, we break down each reasoning, if the credible of the press release, where the indicators are at, where resistance is at, chart pattern, charts history, RSI, different, the MACD, different floats, different statistics about the company, until we get to about 1 to 2 stocks every single morning at around 9:25. Then we got about 1 to 2 stocks at the bell, and then most of the time, 1 to 2 of those stocks are the ones that break out big on the day. And that is why we have an 80% win rate. And why did we do that, guys? Or how do we keep that win rate so high? Is because we break down every single stock. We have a thought. We have our credibility. But what most new traders don't understand is that they don't go into this. They don't have a thought of their own, guys. And that is where we get a lot of problems for a lot of traders, is that they don't have their own thought. All they see is they're blinded by the money. They're blinded by these stocks going up so high that all they're saying to themselves is, wow, that stock's up 50%. Oh, geez, I could have hopped in. It's up 70%. Oh, it's up 80%. I'm going for it. And then they hop in and they're just, infatuated by the stock that they can be making money. And, while that's a very bad thing, if everyone does that, it could just keep on moving on up. So again, just a little short couple paragraphs right here talking about the plain fact that behavior finance. What is behavior finance? It's a psychologically based theory to explain different stock market anomalies. Severe rises and severe falls in stock price. Because again, sometimes different indicators aren't going to say, okay, the stock is setting itself up for a $30 run. No penny stock, its chart setup sets itself up for a $30 run. Sometimes you could say a huge gain, maybe a 70% climb. No one's expecting a 900% climb. And those are, very big runs. Like when DRYS, DRYS went from $5 all the way up to 115. A lot of the shipping company went on some huge rips, and that was off of shippers. But again, the whole shipping sector was hot. That's talking about the psychology, the bubble. And then it just absolutely dumps on off. That bubble's going to pop. One person sells, turns to 10, turns to 100, turns into the whole stock sharing because everyone wants to lock in their position. And then it falls all the way down to $2.93. So what I want you guys to really just understand is just on the pure fact that trading is a lot of studying on the fact that we have indicators that we look at every single day. We go to stockcharts.com. We type in any sort of stock we want. For instance, let's just stay on this ETRM theme. And we see the 200-day. We see the 50-day moving average. Or let's switch to a different stock right now. Let's go SGYP. We go to SGYP. We see the 200-day. We see the 50-day. We can add different indicators like I always like to add. I always like to add, of course, the 13 EMA. Again, I have different lessons on saying why I use these stocks. We have the different MACD, the RSI. We can look at different patterns. Of course, like if we looked at PRKR, and we could say PRKR is getting squeezed between the 200-day and the 13 EMA. That's a nice little pattern because it's bullish on the 13 EMA, but also if we look at PRKR, we can also see that this stock has a lot of resistance right at 275. So this stock has 275 resistance, and we also see that this stock has a trend line which is building higher lows. Now, when we have a top line resistance and a higher low trend line building on up, what does that lead us? That leads us to an ascending triangle breakout pattern. This is where this stock gets squeezed, and this is where the stock gets on a nice little rip, and this is where that stock continues to climb. And this is a very common pattern that brings in a lot of hype. This is a nice common pattern that brings in a lot of excitement. To me, this is visually appealing. To me, this is like looking at a Lamborghini. It's like looking at that hot girl, that pretty girl, that beautiful woman. To me, this is, that good chart pattern that gets me excited. That pretty girl, that beautiful woman. To me, this is, that good chart pattern that gets me excited, that gets me going. Because in the past, I've seen the stock go on nice big climbs. And in the past, I've seen the stock go on nice big rips. And I've seen this pattern work out. Ascending triangle pattern, pop, go on right there. Ascending triangle pattern. Just like this, how we're climbing on up, pop, it gets right there. Ascending triangle pattern where the stock builds on up after a resistance line, pop, we go right there. Ascending triangle pattern. To me, I get that sense of euphoria where it feels good, where I say, hey, I can make money on this stock coming on up, and I know other traders are getting that. And that's the behavior, the psychology, the emotional aspect behind my trading. And that is what gets, a lot of people excited and gets people going in the morning. Like today was a slower day. Now, why is that? Why is today a slower day? Why didn't we have a lot of big time rips? Why didn't we have a lot of big time pops? Why didn't stocks take off, huge today? Why didn't they go, ripping? Because we didn't have a lot of press release. There wasn't a lot of that excitement in the market. And excitement is what gets trades going. And that momentum is what gets trades alive and keeps them running. It's that big feeling going through. So without, going on our, without that big time rip, without those big time news scanners or the press releases. Again, here's our news streamer. We didn't have anything that said, let's go ahead and kill it today. All we have is, going back from this morning, a briefing, today's research, a showcase coming on up. We always filter out everything. We did have an agreement right here. That was a good one on TROV. So we found TROV. And again, why did TROV? Well, we have an agreement with a global pharmaceutical company. We have the CEO saying we're pleased to be working with this company. And that's when we saw TROV, and TROV, what the stock gapped up from 94 cents, ran all the way up to 135 because the excitement was behind the stock. But other than that, there wasn't too much. But again, we were all over TROV because on the pure fact, that's what we do every single morning: find the hottest press releases, find the hottest plays, nail them, and then we wait for the next hype. But right now, again, things are very slow and not too much is going on. So understand where the hype is, understand where the passion is, understand where the emotions are at. And when you understand, we are in an emotional stock trading world. We're not doing Apple, we're not doing Microsoft. This is emotional. This is where emotions are flying. And if you guys can just understand, okay, the stock's going up because people are excited, stock's going down because people are scared, you can make money off it. So again, make sure you guys are thinking outside the box on these trades. You can study charts all you want, you can study different indicators all you want, and time being in the market, of course, is going to help, but there's a part of you that you have to understand other people. You have to understand how the mind works, and you have to get in touch. This sounds a little sensitive right here. You got to get in touch with your emotions on stock trading. Now, again, as I always say, you don't ever want to trade with emotions. If you go into a trade with fear, if you get into a trade saying, I'm scared, I'm going to lose here, I have zero idea what the heck is going on right now in this market, you're going to lose because you're not good. You're not going to understand what's going on. You're going to have fear blocking your judgment about what's going on into this market. If you go in with confidence, as you guys know, the best way to trade is to be a stone wall. Just focus on your craft and figure out what everyone else is doing. Figure out what the stock is going to be doing. Me personally, I like having fun. I like having enthusiasm. I like being confident in my trade. So again, when a stock's going on up, I'm more than happy. Get up, do a dance, jiggle around a little bit, and say like, great job, guys. Get you guys fired up because again, you guys deserve it. I love getting excited. I love being confident. So again, I trade with a lot of confidence. I sit down and I say, hey, let's nail it today, guys. I know a lot of traders who just sit, focus, and that's their thing, and that's perfectly fine. As long as you're not negative with yourself, as long as you're not telling yourself, hey, I don't know what you're doing, as long as you put in the hours of work and you're studying, you're going to be absolutely fine. Now again, same thing in high school, or same thing in college. You take that calculus test. If you were up hours upon hours upon hours studying, you're going to sit down, you might sit there all quiet, focus on the test, nail it, and you'll be the best. Or you're going to sit down at the desk and be like, I just studied so long for this. I'm going to nail this thing. It is going to be easy. You get it, and then you absolutely tear it apart, and you absolutely kill it. You get an A because you studied all night for it, and you worked for it, and you deserve it. Or you can walk into your calculus class without studying at all, and you could sit down, you're scared, you're nervous, you're sweating, the calculus comes in front of you, and you're like, I didn't know I was taking Italian. What is this? Give me a math test. And you're just like, oh, that is the math test. I don't know what's going on here. And then you'll end up failing it because you didn't put in any work. And if you don't put in any work, you're going to have the same exact results in stock trading, and that's an F. And the F stands for failure, and it also means find a new job. Okay, because stock trading is not going to be lasting very long if you do not put in the work for you. So again, put in the work, understand the fundamentals, understand the emotions that go into it, and understand, of course, the technical analysis and the fundamentals. Just today, I want to focus more on the emotional aspect, the more of the psychology aspect. So again, the number one thing people always say is if you trade with your emotions, you're going to lose. But in a world of stock trading where 85% of stock traders trade with their emotions, that is where if you learn what everyone else's emotions are going to be feeling, you guys will be able to win. So be a wall, be confident, and don't get into that emotional state where you're just like crying or you're crying and then you're jumping and then you're crying again and then jumping. But be confident in yourself that you know what you're going to do, but understand what those emotions on everyone else, that 85% of people who lose, those are the people that are letting their emotions take over them. So figure out, okay, it's like, okay, if I was in their situation, I would probably be freaking out right now. Okay, so that guy's freaking out. Okay, look at the stock now. It's probably going to turn a little bit here. Okay, well, we just crossed our trend line right here. So it's like, so again, let's try and do a little example. So we could do a little example just if I wanted to look at this play. So we have, let's say TROV. TROV opens on up. TRV opens on up after the nice press release this morning of having a global agreement with a biopharmaceutical company on a stock that is on TROV. I believe it's a lower float stock. We are pleased to announce nice gap up, gap over $1. So again, we open up at $1, right at 118, starts dropping on down. Okay, we just had a gap up. I'm thinking how other traders are going to think. Well, it got pushed up so high in the first place because traders are saying, hey, you know what? The stock is looking pretty good. This is where the excitement came in. Excitement comes in. So let's look at the bell if we're going to be getting that same exact excitement, if that is going to be getting that same exact hype. Okay, so the stock drops a little bit at the start. Okay, right at here at 119. So considered from the open, we are red. Now I'm thinking to myself, okay, we're coming back on up. Break of that 119, excitement's going to come in. Boom, here's the volume. Excitement's starting to come on in. So we go from 120, we start moving on up towards around 130. Okay, if we can hold around this 120 mark, we should be good, as traders are not going to be selling it, as traders know that, okay, we are starting to build some higher lows. So let me just put in my higher low trend line right here. Traders, again, they're not only trading with their emotions, they definitely have some sort of, some sort of background in fundamentals. So, okay, I understand we have our trend line now. Higher lows are forming, consolidation, bounce off this trend line. If we are green right here, more volume is going to move in, and traders are going to get more excited. Okay, here's the volume moving on in. Here's the excitement coming on up, and now we're going on up right here. Long upper shadow. Long upper shadow, again, we have our fundamentals that we understand. This means we have a trend reversal. Okay, so we have a long upper shadow. That means we're not going to be able to break out, but as long as we hold this uptrend, we know we are good. Okay, red candle pretty hard back down, and a doji star. Again, doji stars indicate trend reversals. What's the opposite of up? Opposite of up, what's the reversal? Trend reversal would be down. Obviously, opposite of up is down. Crack of this trend line, panic right here. If I was an emotional trader, I would be freaking out. I'd be saying, oh my gosh, I got to get out of this. I got to get out of this. I got to get out of this. And this is where it dumped on off. Again, so it's really just about understanding, putting together not only your fundamentals, not only understanding the technical analysis, not only just putting trend lines and all your simple principles that we always teach you, but also figuring out how traders are going to react to this, because these small stocks will react the way your emotions treat you. So that's why it's very important to apply these, to have just another tool in your toolbox, guys. You have more tools in your toolbox, you're going to be able to make more things. If I have a saw, a hammer, a wrench, whatever, keep on going. If I had, damn it, all of Home Depot behind me, I'm going to be able to build, a lot more than if I just had a screwdriver. So again, you want to be able to learn trend lines. You want to be able to learn indicators. You want to learn technical analysis, different fundamentals, what are good press releases. And on top of that, you want to learn different psychology aspects. But if all I know is, trend lines, and all I have is one screwdriver, I might be able to make some money sometimes. Maybe I could put together screw something in sometimes. But I'm not going to be able to build a house. But if I have psychology, and I have press release knowledge, and I have chart pattern knowledge, and I have resistance support, different indicators, breakout patterns, everything along these lines, I could build a house. I have all the tools. I have Home Depot behind me. And I have everything I need. So again, have the proper tools, guys. This is one little segment to add to your toolbox to go ahead and build that house. But again, it is pretty crucial. So make sure you guys are always studying up, and make sure you guys understand this lesson on the psychology aspect, because not too many people talk about it. So make sure you guys definitely understand this. As always, I'm here to help you guys out, dekmartrades.com. And of course, you guys can always email me at dekmartrades@gmail.com. If you have any questions, comments, or concerns, I'm more than happy to help you guys out.